Good morning, everybody. Welcome back to Morning Markets from the team at True Potential. Today we'll discuss two things, the movements in currency markets yesterday and also some Asian economic data that we've had overnight. Firstly, just looking at how asset markets performed yesterday, pretty much a muted performance. We discussed yesterday the more significant movement out in yields that we saw in the sovereign bond market. Yesterday, maybe yields moved out 1 or 2 basis points depending on what market we're looking at. And remember, it's an inverse relationship between yield and price. So yield moving out means a fall in the price of sovereign bonds. Some of the reasons being put forward for the movement that we've seen over the past 2 days is just the expectation of further fiscal support coming through, be that in the US and be that in Europe as well. And that just raising the prospect of inflation picking up ever so slightly over the coming number of months. And we've generally seen inflation expectations picking up over the past 6 months, really, from the nadir that they reached in the height of the pandemic crisis back in March and April time of this year. If we look forward to what the inflation expectations or what break-evens are pricing at this point, in the US, for example, it's an inflation rate of about 1.8%. That's in line, I suppose, with where the Fed are looking for things to improve to, but clearly it's not getting to their 2% average through the cycle, so still some way to go there in achieving that. Just looking at equity markets yesterday, really very little change across global equity markets. Euro Stoxx 600 was down about 10 basis points in the day. If we look at the US market, I think the S&P was up 20 bips and the Nasdaq down 10 basis points in the day. So nothing really significant there. If we're looking at one market just in particular that did sort of stand out a little bit was here in the UK, where the market itself was up about 1.2% on the day. I think a bit of that is just due to, clearly the UK has been a laggard of a market, playing a bit of catch up with what we're seeing. Also, the sector composition of the UK is very closely correlated to economically sensitive stocks. If we think about financials, we think about materials, and we think about oil and gas companies. Also yesterday there's some speculation around the London Stock Exchange Group itself and some corporate activity there, which did obviously support that price, but also fed into supporting the broader index move higher over the course of the day. I think the other thing that we wanted just to focus in on is currency markets. One of the trends that you'll have been hearing us discussing over really the past number of months is US dollar weakness, and that has been a real trend and something that's been evident, and that hasn't changed at all over the past number of weeks. If indeed anything, that trend has maybe slightly accelerated. Now, clearly, one of the beneficiaries there has been sterling. We've seen sterling trade up to 134, but also the euro and a number of emerging market currencies as well have strengthened materially relative to the dollar over the past number of months. The other currency I just wanted to touch on is what we saw in sterling yesterday, and just really the volatility in sterling. We've talked about how sterling has gradually been appreciating against the dollar, against a number of other currencies over the past number of weeks. Some expectations, I suppose, that we're getting closer to some form of a deal and that removing that uncertainty from the market. But we just got a glimpse yesterday of the volatility that can still be there in the coming weeks as we try and navigate our way through the Brexit deadline of the end of this year, and actually I suppose before probably the 10th of December for the European leaders to sign off on the agreement. And sterling fell at one point yesterday about 1% on concerns or views raised by the French government suggesting that they could veto an arrangement if there's been too much compromise within it from an EU perspective. So we'll see how that plays out. Clearly we're getting very close to the end game, but it does highlight the sensitivity of sterling to announcements and to really stories at this point in time around the agreement and the shape of that agreement. The other points that I just wanted to touch on today is continuing really to build on the economic data story that we've had from Asia, and in particular China. So we started with the National Bureau of Statistics and their manufacturing and non-manufacturing PMIs at the beginning of the week. We then had the Casson manufacturing PMI, and now we have the Casson services PMI. And these two things have really correlated together, the private sector survey and the government survey, where we're seeing ongoing strength and improvement, particularly in the services number that came out today, where we saw an expansion from 56.8 last month to 57.8 this month. So continuing positive momentum in the services sector in China. And that comes together at a composite level with both the manufacturing and the services to show quite significant improvement month on month, from 55.7 to 57.5. So ongoing strength and recovery there, playing into both the fact that we're seeing a manufacturing recovery within China, and also that playing into global trade and the recovery that we're seeing there, but also now a more pronounced improvement in the services sector itself within China. And that's something that was lagging the manufacturing recovery. Now that seems to be picking up speed as well. That's it for today. Please do join us again tomorrow. Many thanks.
Thanks for watching. If you enjoyed this video, please leave a like and don't forget to subscribe to the True Potential YouTube channel. If you have any questions or requests for future videos, let us know in the comments.